In Forex, you always trade in pairs. This means buying one currency while selling another. Each pair consists of a base and a quote currency. For example, in EUR, USD, the euro is the base currency. The dollar is the quote. If EUR, USD is 1.10, it indicates that 1 euro is worth $1.10. Now, let's categorize currency pairs into three main types: majors, minors, and exotics. Majors are the most traded pairs in the world. They always include the US dollar. Common examples include EUR, USD, GBP, USD, and USD, JPY. These pairs feature tight spreads, significant volume, and consistent volatility. This makes them suitable for various trading strategies. Next, we have minors, also known as cross pairs. These pairs exclude the US dollar and connect other major currencies. Examples are EUR, GBP, and GBP, CHF. These pairs often provide strong setups, particularly during the London and Tokyo market sessions. Finally, exotics consist of a major currency paired with a currency from a developing economy. Think of pairs like USD, ZAR, or USD, TRY. These pairs are known for their fast movements, higher costs, and unpredictability. Trading these requires caution and experience. The currency pair you choose significantly influences your risk, strategy, and success rate. Start with majors, gradually move to minors, and consider exotics as you gain experience. To enhance your Forex journey, download your free Forex Starter Toolkit. Follow at Boss FX Academy for more insights. Stay tuned for episode 4, where we'll explore the best times to trade in the Forex market. Trade smart. Think sharp. Move like a boss.